Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So today is Monday and it's time to update our view on Bitcoin. So after the collapse that we've got last week, market mostly stand in a tight range, and it doesn't clarify the changes on the high time frame. It doesn't set new direction. But from some signs that we see currently on daily, on intraday charts, we could make the judgment on next step that might follow to the current consolidation. And I think that the last role here will belong to overall sentiment on the market that we see. So as on the gold market, as we discussed in the weekly report, as on the euro currency, we see a bit curious thing that despite a lot of factors that make dollar weaker, so we see poor numbers on the payrolls, some selling and inflation, maybe not last week, but on the previous few weeks, we see some slowdown in China. So everything points on the fact that Fed tightening policy should be postponed, and probably Fed will be slower in its attempt to regulate the interest rates. That in turn should be supportive to the dollar rivals because it postpones the strength of the United States dollar that should start to rise as soon as rate will start to change. But, which is currently a bit surprising, we do not see corresponding reaction on the dollar rivals. So we do not see significant amount of the money that could inflow in euro currency, for example, or in the gold market. The only market that gets the results from that is the stock market. And it's not surprising because it generates passive earn in the way of the dividends, and these dividends are higher than any interest rates right now. So this is understandable. But in general, this reaction on the factors that supposedly should be supportive to the dollar rivals could make impact on the cryptocurrencies as well. So as we do not see any inspiration on the other markets, it means that on the cryptocurrencies we also could get some passive behavior of the investors, and that could wait for some maybe deep retracement or not intend to buy cryptocurrency currently, immediately. So that's the thing that should be in our mind when we take a look at the current situation in the cryptos. Besides, as you know, in the coming weeks will be a lot of important statistics. So we will get the CPI, we will get the consumer confidence, we will get retail sales, that actually the 70% of the gross domestic product. So this will be week that could lead to big changes in markets, especially the CPI maybe could become the first shake. And the cryptocurrency probably will be not an exception in this action. So, as we previously already said, the deep retracement currently on the cryptocurrencies is not something uncommon, it's not something bad. So from the technical point of view, this is absolutely normal. When you have the collapse, and when the market just shows the first bounce after the collapse, the rest of this bearish momentum make the pressure and push price lower before the major upward action will start. So any momentum on the market has to be faded before rally will happen. You can see it by any example in any market. Even here you could see the first drop out of the tops was huge collapse from the 20,000 to the 3,000. This first rally was, here's the rest of momentum that pushed price back to the 3,000 and 4,000. And only after that, when this momentum has been faded, rally has started. Something of that sort we could get here. The depth of this retracement might be different. That's why if you're considering accumulation of the coins for investing purposes, we said that any retracement here could be watched as the good background for accumulation, because overall sentiments stand positive in the market. So you could just split your potential positions and accumulate gradually on any significant support areas. On the monthly chart, you could see that current retracement brings no hazard to overall tendency. We have two side-by-side bullish grabbers. Both of them suggest action above this previous top. Here, for instance, if market will show a bit deeper retracement somewhere back to the 40 even, you can see here we have the MACD line around 41. So I don't exclude the chance that we could get here a third grabber. It also could happen if the retracement will be a bit more extended. On the weekly chart, it's also normal reaction, as we said. This market has formed a reversal candle, reaction on the resistance here, and daily and weekly overbought. Currently, the starting week still stands inside this previous one, but usually, as I said, reversal weeks usually has the continuation. It means that we could get a bit deeper downside action. So currently, I think that it's very probable in the current circumstances. And you could see it based on the intraday charts that I will show you. On the daily chart, actually, we have the major picture that shows us the levels. So once market hits the oversold and the confidence support, it takes the pause. In the downward action shows the pullback now stands in a flat consolidation. But here, guys, the overall consolidation mostly remains some pennant pattern, and it stands above the confluence, with showing no attempt to fast rebound up and fast erasing of this sell-off. It means that market, well, currently mostly is preparing to challenge this support area again. So currently, this situation seems to me that it's bearish, and we could get another attempt to go lower. Maybe we will not reach the 618 level at 38, but at least market could try to take the stops below these lows, so showing the wash and rinse trying to spike down this level. So this is very probable. Because in the current circumstances, based on the intraday chart behavior, I wouldn't consider taking the long position by far. Here's the reason for that. So on 4-hour time frame chart, the price behavior remains dependent in triangle after the sell-off. This is potentially a bearish situation. Taking into consideration the sentiment that we see on the gold market, the euro currency, it seems to be weak. So despite all the factors and slowdown and some decreasing of the statistics, I mean deteriorating of some statistics in the United States, market still has not enough power to challenge the dollar strength. And you could see this consolidation with this positive MACD has some signs of the bearish dynamic pressure, which means that market could try to challenge these lows. I'm not sure that will be, or better to say not sure, but I mean that maybe we will not get the straightforward downward continuation and real breakout. This market will fall deeper to the 38 area, but at least some stop grabbing, as I said, below this low, spiking down here, trying to break the confidence support, and still could happen in the nearest term, especially when we have a lot of statistics on this week. Potentially, this situation in general looks bearish. So, besides intraday type of actions, you can see here it brings no really signs of the thrusting action, brings no signs of the possible reversal, and which also makes me think that, and don't forget that this actually a reversal candle on the weekly chart, and it makes me think that indeed some downside continuation looks more probable. Correspondingly, if we'll take a look at the extensions, and every time where you're dealing with a triangle, this common suggestion, usual suggestion of this is a butterfly. So market currently stands at the 618 support of this pullback, and we could consider the two possible extensions. The first one, nearest is 127, stands 4150 approximately. So I'm just speaking about this potential pattern, as you understand. You probably could build it by yourself. So this is first potential pattern that might be formed. If some really strong factors will be in favor of the United States dollar or against the cryptos, some specific news maybe could be released. 1618 butterfly also exists. It stands at 40 even, almost 39.97. So somewhere in this area. Next one, it will be already the daily 618 support and daily oversold. It's around 38. So for this week, we probably should set the floor around 38, 50, 40 even area. So that's potentially the lowest area that market could reach this week. But first, we will keep an eye on how market will behave with previous lows. If it will be just spike down, grabbing the stops below a fast return, that will be potentially bullish. And in this case, the butterfly could be considered for taking the long position, at least for scalping purposes, or very short term, as a first reaction on this support area. In this case, it could be some upward bounce. Here, if it will be breakdown and market will stand below these lows, so just straightforward, it means that market has broken the daily confluence, and we should be ready for a deeper downward action. In this case, it would be better to focus on the next support area, around 38.20, 38.50 area, this 618 level. So that's been said. Currently, I think that it would be better to wait with taking the long, taking the long positions for the trading purposes. I mean, for accumulation and investing. This level could be considered for adding a few coins in your portfolio, and if next breakout will happen, you could consider the next level to add more, just to, as usual, accumulation happens on the market. For the trading purposes, taking some speculative result, I think that currently it's not the time yet for taking a long position. So it would be better to wait and see what will happen, because bearish factors here are strong right now, and there are really a lot of amount of the bearish signs that we have here. Correspondingly, for taking the short position, theoretically it is possible, but well, you will have to place relatively far standing stops. I think that at least it will be about the C point, but to keep the purely bearish context valid, it would be better to place the stop above the A. In this case, the butterfly will be erased while market will show the upper breakout of the triangle, and in this case, the bearish context will be broken. But as you can see, this is rather far distance, so it's above the 47.50, and currently when the downward action already has started, it's not very comfortable to place so far stop orders. From that standpoint, the attractiveness of taking the bearish position is not very high. So this is up to you whether you would like to do it or not. But since we mostly have the bullish context on the higher time frames and we treat this price action mostly as a retracement, I would focus still on taking the long position in the future. So it's using this direction as a primary one. That's why concerning the bearish stuff, well, this choice is up to you. This is a very short term, and I already mentioned some flaws that this setup currently has. So that's actually what we have on the Bitcoin currently. So let's keep watching, and especially be prepared for statistics release. Check the calendar for this week, and be aware of any reaction on the cryptocurrencies as well. So we have the inflation statistics, and that really could make impact on the cryptocurrencies as well.